Agarwal joins us, Group CFO with Raymond, and let's take the conversation forward. I just want to start with Amit in terms of how does he feel the entire festival season this time is gearing up. I remember, in 2021 and 2022, we had a conversation where he said, look, we are in for a great wedding season, a super Dashera and a fabulous Diwali. And there has been no looking back after that. So are we in for a similar kind of a repeat? Great wedding season post Shraddh, good Dashera and a fabulous Diwali?
For having me on your channel. And I think I reiterate the same thing. And as India, as a country, we strongly believe in the festivals. We have a lot spending power goes into the festivals, and then comes the big bang marriages. And I think wedding, very, very clearly, we are seeing, as we had significantly lesser number of dates for weddings in the summer period, most of the weddings have shifted actually into the winter period. And that is why we are quite optimistic about a strong wedding season. And obviously the festivals are going to be very good, because if you see, we have already starting to see the trends from our dealer franchisee network, that they're already demanding the product and saying, because the network which I have got spreads over 600 cities, which tells very, very clearly that the demand for our products is going to be very, very strong. So we feel quite optimistic about the whole wedding cycle as well as the festival purchases.
Your understanding, what you're sharing with us is crucial, that even though we are getting indications of some slowdown in urban India, some slowdown, let's say, in sectors like autos, you are confirming it to us that in the category which you represent, which is branded apparel, shirting and suitings, if I'm getting the pronunciations right, shirting and suiting, right?
Yes, absolutely.
See, देखें सीख गए आपके साथ भी रह करके. Okay, there is no slowdown whatsoever.
No, so what we had seen in the past for the last 12 months, we had seen a significant slowdown. And when we see the going forward, we are seeing things recovering back on a very strong footing. So clearly very strong recovery going to be compared to the first half to the second half. And actually, if you see the wedding, in terms of the wedding space, as Raymond, we have got, if I take the whole wedding market for the menswear, it translates to anything between 76,000 crores. And if I take my retail value, it is going to be almost like 5% of that. So we enjoy that kind of a market presence, market share in the wedding space. So that also is a good opportunity for us in order to play it stronger.
The other thing I want to talk about, Amit, is this, brand diversification into the ethnic segment of clothing that you're making.
Yeah. So actually, if you look at it, previously the weddings were used to be normally 1 to 2 day affair, where generally people would wear a suit, which was clearly our product, which people would buy, and then go and participate in the weddings. Now these weddings have become much more longer. It tends anything between 3 to 5 days. And you won't be wearing 3 to 5 days exactly the same suits. So people have started to wear the Indian ethnic wear. And it was a natural extension for us with a complete man for the wedding that you would extend into the ethnics. And that is why we have opened more than 115 stores all across the country. And we are seeing this is going to be the first proper season when we are going to see a good traction on our space. Because once again, the franchisees have demanded that why don't you keep this product also with us, or give me a franchisee shop for ethnics so that I can complete the wardrobe for a wedding as well. I think that is something which we have launched upon. Our products are very well liked. We source it from more than 20 different areas in the country, so that, and actually what you want in a wedding is a uniqueness. That if I wear a certain sherwani or a kurta or something, which has to be so unique that nobody in the whole circle wears the same. So I think that is what our big focus is. And obviously the quality is going to be very, very good. Therefore, we are getting a good traction from the marketplace.
Absolutely, it makes sense to be that one-stop shop for all, requirements of clothing. But other than that, do you think the ethnic business has potential to actually overtake the traditional, like Nikunj pointed out, suiting and shirting business?
Actually, I would not think that it can overtake, but in terms of the revenue expansion, which we are seeing, I think there will be a significant faster growth in that, as we plan to open more than 350 stores for the ethnics, dedicated ethnic stores. Because when you go for a wedding shopping, you want a nice big place, maybe 1200, 1500 square feet, and you don't go on your own. You have an entire family, at least 4 people come along with you. So you need to give them a proper view. But it has a potential from a very large revenue it can participate. And that is why we are saying, if I look at it, the wedding space, we clearly see anything between 12 to 14% of growth over the next 4 to 5 years on a year-on-year basis we can achieve in the wedding segment for us.
I want to understand the cash flow of Raymond's now that the real estate business and other things would be separate. You've incubated the real estate business from the balance sheet without raising debt, but that business will be separated. The engineering business, I think, will be part of the listed entity, which eventually would get separated. So where is the cash flow of this business moving? Because for the textile sector per se, it is a very long cash flow or credit cycle which is always at play.
Yeah. So if you look at it, what we have been able to do is, we used to have a working capital in the lifestyle business to the tune of 110, 115 days. We worked very hard, especially during the COVID and post that to prune it down to somewhere in the range of 60, 65 days. Currently, in the first half, you will see always a higher working capital, because that is the time you produce, make the shops available, all your products, so that the second half, the sales can happen. So I think average anything between 60 to 65 days is something which you are looking at as a working capital. But the big advantage is, last year in the lifestyle business, we delivered 1100 crores of EBITDA. Now, even if you need to see that with the expansion, with a growth of 12 to 15% revenue growth in this business, you would not require to go out and borrow. Because what we have done is, with the demerger, we have made this company a net cash positive. So based on this and the significant cash flow which is being generated, and there are no significant capex except for the garmenting export business, we have a small 200 crore capex. Other than that, we don't have a large capex. So we are not seeing really a challenge in terms of raising debt or such things. Rather, it would be a significant free cash flow generating business, and going forward, and continue to be operating with a 30% plus ROC overall as a business.
Sense for Raymond's to do, have company owned showrooms or have franchisee model, which in a sense has been your mainstay in smaller towns?
So actually, what you said is right, that our franchisees all across have made their presence with a significant amount of social status, as well as they have a decent earnings. Therefore, we continue to get franchisees for all our models, be it the Raymond shop, that is the TRS, where sells the fabric, apparel, and everything, be the EBOs, either for ethnics or for Park Avenue, Raymond Ready to Wear, Color Plus. So we continue to have, we would have some COCO company-owned shops, let's say 15 to 20% all across. It is primarily for branding and less to do with a large format in terms of selling the product. It is to do with the branding, but 80-85% we continue to have a franchisee, and we are getting very good traction of franchisees. As you know, that last year we opened 200 EBOs. We plan to open another 500 to 700 EBOs in the next 3 years. So what journey we have traveled on the Raymond shop, the success, we are replicating it for the apparel business also. So at the end of the day, we are planning to have almost 1,000 plus TRS stores and 1,000 plus EBO stores in the next 3-4 years, including the ethnics, Park Avenue, Color Plus, and so on. So that would give us a good all India presence. And as the cities expand, we need to be present. वो कहते हैं ना, जो दिखता है वो बिकता है. So that is the philosophy with which we are going ahead.
जो दिखता है वो बिकता है, but everybody is saying that Raymond का मान online क्यों नहीं बिकता है?
But so I'll give you simple. Our product, as I said, 50% of the product now is sells for a wedding. Wedding, it's a very touch and feel business. If you go to the store. Plus, all of us want an affirmation when you go to buy things, some stuff like a shirt or a trouser, or especially for the weddings, you need an affirmation from 3-4 people that it looks well on you. And therefore, what happens? It is a brick and mortar store. And we have seen very clearly the success. Therefore, we are expanding very big into the expansion of EBOs. So, and online is a small presence. I'm not going to say it will be no presence, but I think what is converting is more like an omni-channel, where you will have the flexibility. Let's say you bought the shirt on online and you want a little bit change in the size or such things, you can go to my offline store, get it done. So I think what we are focused on is more on omni-channel, so that you have the ability to do some bit of fun online, but the whole other service part. And I think retail is a therapy. So therefore, what is important is an experience when you go into the store, and that experience would always be missing when you are doing an online shopping.
I respect that, but since most of the brands now have what is called as a very strong digital, forte, they're using AI, all kind of bots are being used. What is your plan to actually, associate with that market? Now, today I understand that wedding and shopping is all about an experience, but given that we are consuming everything online now, I'm sure the young customer of Raymond would like to have a better shopping experience when it comes to the online part. Are you investing enough in that space?
Yeah, absolutely. I think that's a correct point, that we are investing into it. But do I believe that fabrics you would never be able to sell online? Only thing what you will be able to sell is a Fab Apparel. So apparels, you are doing it. You are doing roughly in the range of 100 to 120 crores of sales through the online. Now, in that positioning, what we are doing is, as I have a 12 million CRM base, now we are utilizing this 12 million CRM base and saying, okay, this particular customer wants this kind of a product. So we give the advertisement or marketing promotions to that guy in that particular framework, which AI is being used. So therefore, what we are doing is we are investing behind it. Second thing, digitally, people go and check out the products, but eventually they end up coming to our store and buying it. And I think that is very common. And even with the younger generations, we have seen very clearly that people have come up to say, okay, this particular design I saw digitally, but I wanted to actually come and have a feel of the product, look at it, how it looks on me. Therefore, what we are doing is we are investing in some of our shops that previously used to just drape the product on you like a suit, but now we are using some newer technologies which would look like, if you buy a particular fabric, how a suit would look like on you. So therefore, that is something which we are progressing well. And we are investing very big into technology. We have identified at least every year to spend 30 to 35 crores investing into technology in order to give a better customer experience.
Okay, good luck with that. Great to have you then on the show, Amit. Thanks as always for highlighting where the Raymond business is headed next.
Thank you.
Okay, that.
If you like this video, then like, share and subscribe to ET Now.